The 4th of September. Can I thank everyone for attending today and look forward to going through these interesting set of papers, and I'd welcome everybody's participation and any questions you may have. If we can go to the agenda then, apologies for absence.
Thank you, Chair. Apologies from Councillors Adam Davis, Mike Locke and Mike White.
Thank you. If I could ask for any disclosures of personal or prejudicial interests, please. There is schools.
Yes, Madam Chairman, I'd like to declare interest in items 7 and 8, I think it was, wasn't it, paper?
Schools?
Pardon?
Schools?
Schools, yeah.
8.
Governor Croy School.
Any other declarations? It's not you, it would be Mike. Okay, thank you. If we can go through the minutes of the meeting of the 17th of July, page by page for accuracy, please. Page 1, page 2, page 3, page 4, and page 5. If there are no questions on accuracy, can I have some support for approving the minutes, please? Got hands up in the room, and I've got hands up on the screen. Thank you very much. And we've got 2 counter fraud reports in the pack. One at agenda item 4, one at agenda item 6. And for convenience, I hope members will support us taking both those reports at the same time. And we return then to the statement of accounts after, if every member is happy with that. Yeah. Okay. So, Jonathan, are you online? You with us, Jonathan? Yeah.
I think.
Okay, if Jonathan's not here, we'll have to move that down after Ben's report. So Ben, are you happy to go next?
Yes, I am, Chair. Thank you. So my main item is the statement of accounts, and it's a couple of opening comments I would wish to make. First of all, I'm sure it is not lost upon you that this is coming much sooner than last year, which lightens my mood entirely. Although the eagle-eyed will have noticed how foolish the law is, because we are still late. Technically, authorities are meant to produce accounts by the 31st of May, and the Auditor General is meant to have certified them by the end of July. That would be challenging at any point in time, especially as the Auditor General tends to focus particularly on the NHS accounts first, and has only just finalised those in the last week or so. If ever there were a truism that the law is an arse, this is one of them, but the reality is the law is the law. You are also aware that I've made clear that despite our travails and difficulties, compared to other parts of the UK, we are not in a bad place, but it still professionally discomforts me. But I am pleased to acknowledge and recognise that we handed them over just into the second week of August. They are with the Auditor General and his team, and they will do what they can with them when they are able to do so. That's a matter for the Auditor General to decide when and how they approach auditing the accounts. The accounts themselves are incredibly complicated, and I'm not going to go through huge detail, but I am going to draw your attention to a number of the matters, just to sort of talk you through and walk you through some of them. I would remind you, you are here in a strategic capacity. This is an for information item. I'm more than happy for any questions to be asked, but if they're really complicated and test my brain, I may offer to do them in follow-up in writing. But I think it is important I give you a broad walkthrough and remind you that one of your duties is to, does it look like it's been produced by a competent qualified accountant? Does it look in a broadly consistent format? Does it look like it should be in the format that is required by the Accounting Code of Practice? And my assurance to you as an officer is that is indeed the case. So if I draw your attention to the report itself and start with page, and I'm going to use the name numbering convention of the agenda pack, so I'm going to jump to page 33. And my apologies because I wasn't expected to be on, but I've almost touched upon the first two, which is we're meant to do it by the 31st of May and the 31st of July. Frankly, no one achieves that these days, but they were handed over on the 9th of August, and the copy is appended as the appendix. In terms of the report itself, as a whistle stop through to give you a flavour, I'm going to go to page 47 first, and this will be very rapid, very high level. but to give you a flavour of the important bits and to highlight how they are broadly consistent with the outturn report, which has already gone to Cabinet. But obviously the statement of accounts includes the HRA combined and our group accounts, not just the general fund and HRA separately, which is what Cabinet gets at outturn. So on page 47 of your agenda pack, you have the on a page revenue budget and revenue spending as a whole. Worth noting, gross, we spent over £1 billion in the first table, and then a summary of what it was spent on by type of spend, and in the third table by a function and activity gross. It will come as no surprise that education, social services and place dominate our spending, and that may be of relevance when you come to question me on other matters later. That is where an awful lot of the pressures are in local government as a whole. I would draw your attention to that middle table, which is notwithstanding the pressures that local government is under, and we were under, the budget was set with a planned very large draw from reserves. And actually at outturn, that reserves transfer figure of minus 0.9 million shows how remarkably stable 23-24 was. I am going to repeat the advice I gave to Cabinet, which is, phew, we didn't need to spend all the money we thought we'd need to spend. That provides us an opportunity to roll it over and live and fight for another day. That also may become pertinent when in due course members will be aware. No doubt the Auditor General is doing a review of the financial resilience of all local government bodies as part of his suite of looking at the resilience or lack of it, given the potential lack of funding for public sector spending in the coming years. Page 49 in similar vein and in similar format gives you a summation of the big areas of capital spending, and it is worth recognising that we remain a large capital spender in Wales terms in local government. Again, almost all of it spent in place, both in terms of the HRA and the general fund, relatively small amounts in others. I get the joys and delights of spending naught because I only hold a small contingency sum for any niggles that arise in the year. And then again, the table at the bottom, which summarises the big areas of spend, some of which are the routine standard things you see every year, but by the very nature of capital, many of them are very scheme specific for individual schemes and projects being taken forward in the year. If I take your attention to page 61 next, as my preferred item of drawing to your attention some of the big items, I am skipping over quite a lot, but I think it is important. One of those issues I already referenced is sustainability. So page 61 of your agenda pack, which is page 26 of the numbered statement of accounts, is the movement in reserve statements. One of the things that's going to be of interest to all observers of local authorities and their accounts, including their auditors, are how much have they got and how long can they survive for in straitened times. I could have chosen to do the group movement in reserves. I'm choosing to do the council's own reserve statement. The two are broadly similar. There's a few extra bits in the group accounts. You will note the general fund balance increased from 10 million to 12 million. They're still relatively small for the size of the authority that we are, but it is still pleasing to get to an outturn which has bolstered general reserves for the first time in about 7 years that I've been acting as the Section 151 officer. The earmarked general fund reserves went down. We set the budget with a very substantial planned draw for the Economic Recovery Fund, draws to enable us to finance very substantial inflation which persisted through 23-24, albeit headline has now dropped down. A very substantial increase to the housing revenue account for some very specific reasons. It was a strategic choice on my part to give advice to Cabinet, which was endorsed to try and bolster that. The HRA does do an awful lot of capital spend financed by revenue, but there are also some other risks around which made it appropriate to bolster the housing revenue account position. Capital receipts reserve was drawn down, and the capital grants unapplied went up quite significantly. That's one of the sort of slightly funny money ones in there. And so if you take the first 3 or 4 columns, you get to the exact £0.9 million worth of reduction to reserves overall. And when at one point we were thinking we might need to make 20, 30, 40 million pounds worth of reserves draws, that is why I opened with great position to be in, to get to outturn and roll them over and reset and rebase for the coming year. I'll probably talk more about the coming year when you ask me some questions on in-year risks in my directorate assurance statement. The end column then includes the bit that I always pejoratively refer to as the funny money reserves, the thing that tripped us up a couple of years ago and got our qualification, which we have recovered from the unusable reserves, the ones that are jam jars with padlocks on. very, very substantial and very significantly distort the overall position. Anyone landed from Planet Zog, we do not have £1.4 billion worth of reserves to spend. The vast majority of them are in the technical, weird and wonderful category, which I've explained previously in training sessions to you and to council. I'm going to go to page 65 and 66 as well, because that's the balance sheet. And again, I have chosen the authority rather than the consolidated. They are broadly similar, but again, they're slightly different things. Just want to rattle through a couple of those so you get a flavour of it. Should be no major surprises. Last time I checked, the council did in 23-24 most of exactly the same things as it did in 22-23, so you shouldn't expect wild swings. And in my money terms, it takes quite a lot of money for me to be excited, as it does the auditor, in terms of materiality being well above £10 million. Fixed assets, pretty material, pretty stable, just under 1.8 billion, just over 1.8 billion. It's still going to be, when it comes to the audit testing, where they are likely to have comments, because get that wrong by 1%, you're out by 20 million, and it's material. Not any significant change in the next set of assets and long-term investments and debtors. So you've got long-term assets as a whole are relatively stable. Current assets also relatively stable, other than for short-term investments, down materially. That should not surprise you or any observer. I have made clear for years that we have borrowed in advance based on our MTFP for our capital programme, and we are applying substantial amounts of unsupported borrowing. Having already borrowed the money, it effectively requires me to draw down my cash balances. So you should not be surprised that if there's £40 million worth of unsupported borrowing, I haven't gone out and borrowed more money. I've drawn down my cash balances, and I've drawn down short-term investments by about 40 million quid. Current liabilities, equally broadly stable. Over the page onto page 66, you will note long-term borrowing dipped down a bit. There have been some interesting debates in council. I'm sure there'll be more tomorrow. Long-term borrowing has gone down a little bit because we've redeemed 2 lots of £10 million worth of Lobo loans. There are some also capitalised interest costs in there, but long-term borrowing has been stable because I took advantage many years ago of low rates. The strategy agreed by council on my advice is to hold fire and wait for interest rates to come down materially. So we will only see reductions there if there are lender option, borrower option loans called, or PWLB loans that actually hit maturity. There are a couple that will mature over the next couple of years. On the other side of the equation, in terms of reserves, it links to the movement of reserves I just referred to. You see quite clearly, general fund balance is up 20%, HRA balance is up 60%. Yes, a drawdown in capital receipts reserve, a 50% increase in capital grants unapplied, and a slight dip in earmarked reserves, but a fraction of what we anticipated. Overall, usable reserves go up. That should not come as a surprise, given the outlook for the public finances. It is perfectly logical and rational for a treasurer to give advice to cabinet and council and expect council to ensure that we bolster for the difficult times ahead. And as I say, the funny money side, then the rest of the reserves, the big one, the 1.2 billion pounds, a couple of changes, nothing too material there. It's the usual stuff in terms of the revaluation reserve and capital adjustment account, which are the contrary entries broadly to the fixed asset items on the balance sheet, and then the capitalised pensions reserve in terms of which values the overall pension fund. Pension fund goes to the pension committee and board separately, but it's a £3 billion pension fund, and a £70 million liability in a £3 billion pension fund is, again, in my world, in relative terms, small bit. It's still a big number in isolation. But that sort of gives you a flavour of the core accounts. There should be no surprises there. In terms of consistency with what's been reported to outturn, consistency of the format. The final thing I would want to pause and reflect on is I must pay tribute, not only because we've brought forward the timelines, and I'm back to a complement of staff in capital, which is one of the hold-ups and difficulties we have for the last couple of years, but this is the first year in which the statement of accounts is compiled on the new Oracle Fusion system. So there will be some additional testing by the external auditor, no doubt. Every year there's always a check of old balances into new, but this is now on a fundamentally different system. You will be aware some authorities across the UK have got into grave difficulty with Oracle Fusion. We have had some teething difficulties of our own, and I am on the record, and there are references in the audit annual governance statement, the Chief Auditor's opinion around some of the pressures we've had. And it has undoubtedly not been easy to implement a completely fundamentally new system at the same time as maintaining pipeline production and everything else we do. But we got to the year end in a better place than we were during the year. We are now in a position where I anticipate reporting back on a normal time frame in terms of budget monitoring. Last year we were a little bit later, but it must be remarked upon by myself to pay tribute to all staff in my function across the council who've had to do that on top of the day job and everything else in terms of recovering from what has been a very, very challenging period of time. And that includes my IT colleagues and colleagues in resources, who provide a number of the functions that don't directly line manage to me, but for which I have professional oversight. I don't intend to dull your senses with me going through and providing commentary on 200 plus pages. I still remain of the view they are far too complicated for your average person to understand. They're probably far too complicated for me to understand at times, but the reality is they serve a purpose. It is more important that they're done as timely as we can, but our auditor colleagues and myself have always been in discussion. We would always value getting them as right as we can over a rush for timeliness, but I'm still incredibly pleased to present them to you 3 months earlier than last year. I do not want a repeat of having to produce a set of final accounts after the following year's budget's already been set. My head can't cope with 3 years of things open at the same time and them all overlapping. I will come back to that probably when I talk about the impact on some of my directorate assurance statement stuff in the other item that I've got on the agenda. But that's all I wanted to say in terms of walkthrough and place on record my thanks, Chair. But I'm happy to attempt to answer questions, but if I don't know them, I might be giving written answers instead. Thank you, Chair.
Thank you for that, Ben. And I would agree they are a very difficult set of accounts to troll through. It's taken me a considerable amount of time to go through them in preparation. You made reference to the role of the Governance and Audit Committee at the outset. Just to refresh and to reflect on our responsibility on financial reporting, we are asked to review the annual statement of accounts, specifically to consider whether appropriate accounting policies have been followed and whether there are concerns arising from financial statements or from the audit that need to be brought to the attention of the Council, and then to consider the external auditor's report to those charged with governance on issues arising from the audit of the accounts. These are a draft set of accounts, so we've only got half of the picture today, and the accounts may or may not change depending on the outcome of the auditor's reports. So in that context, we will be getting these back with a fuller picture on what the Audit Wales opinion is on the accounts. So with regards to the detail, etc., I agree with Ben. He could answer some questions, but he may not be able to answer them all if we go down into that level of detail. So in that context, I'll open up for questions. I can see Sam, you've got your hand up.
Yeah, thank you, Chair. I'm not going to ask any in-depth question in terms of the content of the report. I agree it's a very high-level report, and if I can just thank Ben and his team. My question, Ben, is really the context of the report, just in terms of the timings that we're supposed to prepare this for. I'm just wondering why it sounds like the timeframes in terms of the preparation of the report seems incredibly unrealistic for any institution. I'm just wondering why those timeframes have been left in place and why they haven't been altered to a more realistic timeframe. Because it seems like every time we come to this report, every year when we come to the report, this is mentioned. I'm just wondering why it's not deferred and pushed back into a more manageable time, not just for this authority, but for every authority. So I was just wondering if you could shed some light on that.
You're right, Councillor Pritchard, and the reality is it's something that infuriates me professionally at one level, because frankly about 6 authorities out of 400 in the UK ever managed to hit these timelines. We did hit it the year before COVID. Clean Bill of Health, we hit May. We did it once. Our audit colleagues couldn't hit July because they were busy doing the NHS accounts. It is a matter for UK government and then Welsh government's own interpretation of what they choose to do. It does infuriate me. My professional institute does seem to make things more complicated every year. By simplifying it, they add another 30 pages, but that is what it is. I am a member of that institute. I'm duty bound to follow it. The one thing I would acknowledge is governments tend to like to have them audited because ultimately they are all added together to produce the national whole of government accounts. And that's the sort of funny money stuff, which includes everything imaginable. It includes value in tanks for the military, missiles, everything under the sun, through to intangibles and seabeds and all sorts of things. So I get the end product, but it ends up being invariably the whole of government accounts are pulled together on a draft basis, because I don't think with the greatest will in the world, there are enough auditors and accountants going around to hit 31st of May in every case. There is a recovery plan for England in particular, because they are particularly behind. And there is a phased implementation, but there is no sign of the let up of changing those parameters, I think because it's driven ultimately by whole of government accounts. But in terms of the relative size, the Auditor General for Wales makes a value judgment on what he sees as the priorities, and the NHS as a whole is bigger than us, so it's not perhaps a surprise he does that one sooner than us. I just don't think it's going to be resolved. I do not see things getting easier, and in fact there are other things. There are statutory overrides in England, there are arrangements around IFRS 16 around international standards. I think a lot of it is driven by, we must be transparent and do it really, really soon because that's what PLCs have to do. But they tend to be, unless they're a super conglomerate, they tend to have 3 or 4 things they do. They don't try and do 300 different things with lots of different segmented bits, the HRA separate, City Deal separate, some of the grant streams separate. I just think the desire is inarguable, but I just don't think it's ever going to particularly meet with reality. Maybe if technology makes everything magical and it all gets sorted automatically by all of the entities, maybe at one point, but ultimately it still comes down to my value judgment, because this is as much art as science, and then exactly the same layer from the Auditor General. So I don't have a solution, Councillor Pritchard, but I do understand to some extent why our overall political masters want it, because it does feed the national accounts ultimately.
Thank you both. Councillor Leslie Walter.
Thanks, Chair. Just really to say thanks yet again to the efforts of you, your team and all the other people involved, because I think it's absolutely astounding that, considering the deadlines, you managed to get within 1 week. When you said you were behind, I thought you were going to say, you've just managed to do it. So well done. The only thing I would say is a slight negative rider is, of course, the more efficient you are, the more you make a ride for your own back, because they'll keep expecting you and other authorities to manage it. But well done.
Yeah. Councillor Mike Lewis.
Hi, Ben. I know I've taken on board what the chair said earlier, and these are not the finalised figures that we have, but there is one worrying trend that seems to be increasing every year, which is a long-term debtors. I see it's gone up another 5 million. Now, I know Ness was here earlier in the year, and she explained that her team was now getting a handle on this long-term debt, but I mean, it's a small, insignificant figure to the overall budget, but it to me, that should be chased, and that should be going down every year rather than going up. So I just wonder if you could just comment on that, basically.
I think without going to the direct page, one of the things that's hugely confusing about the accounts is what a long-term debtor is. My starting presumption, I might be able to get to the note in time, is this doesn't just mean AR taking a long time to get stuff. It would include some of the weird and wacky things we do, where we operate town centre loans funds and things like that, which are not borrowings on our behalf, but on behalf of other parties. So there are a raft of other things that would be classified as long-term debtors, because it's money owing to or from another body over a year. It's not likely to be AR related, albeit they all get bundled into the same items. I will have a check to make sure that's broadly right from my memory, but I think it includes a whole bucket of other financial instruments which are not straight plain vanilla borrowings. Councillor Lewis.
Thank you, Ben.
No other comments in the room. Julie Davis.
Thank you, Chair. Ben, could I ask you a couple of questions? First one about NNDR income. It's fallen from 89 million to 79 million over 22-23. As redistribution is based on head of population, could you explain why we've had this fall of 10 million, please?
So NNDR, as you say, is an interesting one, isn't it? Because I have a statutory duty to collect NNDR based on a penny in the pound set by Welsh ministers and on a valuation, a rateable value set by the Valuation Office Agency. The rateable value was updated in 23, so a whole raft of properties went up or down, and many went down. The high street post-COVID was worth an awful lot less, according to the VOA, than before COVID. There are also, anyone that lost out was entitled to very, very substantial transitional relief. It is also the case that in 23-24 there was still 75%, I think it was 75% in Wales, I might be getting confused with England, retail and hospitality retail relief. That's the one that's now been reduced down to 45% in the current year. So you will start to see the local rateable value go back up. But you are right that in the totality, the less that is collected locally will result in less available for the national redistribution pool. There are also there will be equally some others that are going through. So I know there were some very big valuation adjustments down. VOA makes that decision, which just reduces the overall pool. I report back to Welsh Government. I don't lose out as a result of that. I'm merely collection agent, as I know you understand, for the Welsh Government. But the point you make is a valid one. I am aware of a very, very large, another substantial one with another statutory undertaking, which will result in another major reduction in rateable value as a result of decisions taken by the Valuation Office Agency. So I can only account for what I'm able to account for. A lot of it is value driven. As you'll be aware, NNDR is based on the theoretical rentable value of a property in any part, and high streets have tended to see theirs come down very, very significantly. We've seen some of our own holdings go down very, very substantially. It doesn't affect us, it just affects the collection rate and the amount handed over to the pool. But ultimately, if the overall collection and the pool goes down, there is less money to give to local government on that one. You're absolutely right. But we are driven predominantly by ministerial decisions on the rate and by Valuation Office Agency decisions on the valuation. And post-COVID, the value of many properties is significantly lower than it was pre. That automatically results in lower take, less going into the pool, and it does mean there will be less aggregate external finance, the combination of revenue support grant and NNDR, to come back to local government. It may cause us all collectively in local government some difficulty going forward, and the point you make is a perfectly valid one.
Thank you, Ben. And if I can take you to expenditure on other costs, it's increased by more than 20% over 22-23, from 241 million to 295 million, which, as you'll appreciate, is quite material. Is there any analysis performed to isolate the different elements that contribute to that increase? Because we're aware of inflation, but I would suggest that perhaps inflation wouldn't account for all of that. So does your team look at inflationary impact versus increased usage versus potential wastage, so that you can home in on possible savings going forward?
I'm not sure which specific bit you're in, but in terms of principle, yes, we do look at high level movements. It's one of the things that the external auditors also look at, but is going to be one of the things that will be of some interest in terms of what does new system produce in terms of reporting detail versus old. I've got exactly the same issue on a couple of other items in the accounts. I am satisfied they are 99%, 95% right. You know, I'm still confident enough to put my signature to it. If I wasn't, I wouldn't sign them off. but there are some things that I'm less happy with. There were some manual workarounds in year to get us to a set of accounts by year end. There are some interesting issues in terms of cash flow statement, not cash itself. Cash is king, and I'm totally confident the cash is the cash. But some of the reporting has proven a little bit difficulty in terms of comparability. There is no doubt that there will be tests. I do a high level analysis myself, and on some of them I scribble little notes like, why is this gone up 30%? Why has that gone down 20%? On some of them I'm able to answer them. This time around there's a couple where I can't immediately definitively answer them, but I have no doubt, I mean, you know, as a former auditor, and the external auditors will do the same, we do provide schedules, and we are obliged to set out written schedules to our audit colleagues for any significant variations, because it's an obvious one to look for. Is there anything that causes it? Is there any material misstatement? Is there any error in coding and things like that? Not a level of detail I could answer at this point in time, but I can assure you it is done, and it will be something that our audit colleagues will undoubtedly test. They do look for large-scale variations.
Okay, thank you very much. And my last point is not so much a question, but more, well, I wanted to find out whether there's a template for the statement of accounts, because the narrative statement is to enable non-financial people to understand the accounts, as I'm sure you'll appreciate. But pale blue is used quite a lot with grey print, and the RNIB states that it should be avoided because that is the one of the most difficult combinations for people with visual impairments to cope with. So I'm wondering what iterations the statement of accounts go through before they're published to make sure that they're accessible to all.
Frankly, with the reporting timescales, there is absolutely no chance to do any of that. That may shock you, but that is the reality of it, to turn them around as a set of financial statements. The template itself is in a format. It's something that I can raise with colleagues to look to change the colour scheme. We choose our own templating over the years. That's never been raised with me before. We have similar issues with the whole raft of things. That's not meant to be dismissive of it. It's very valid. If there was someone that desperately excited to read our accounts, there probably aren't that many beyond the members of this committee and council and myself and the auditors, but it's a fair comment. But in reality, it's, you know, when you think about a lot of documents the council produces, which are hundreds and hundreds of pages long, and then you'd be thinking how many things are checked through and validated for that sort of wider inclusivity. There isn't time with the time frames. We could be here for forever. But if that's a particular one, I know some of my colleagues have a real bugbear when we often have lots of colour code and we use yellow, green, pink and all the ones, and green's awful for some of my colleagues on occasion. So I will note that one, and it's in our gift to change the format. The template itself is defined not in the accounting code of practice itself. There is a supplementary document that you can buy from SIPFA, which probably is colour coded very similarly to that. So they probably might not have followed the rules either, but it is of our choice as to colour scheme. But actually a lot of it is entirely in our gift as to what to do. The main statements say what items need to be in. The rest of it just says, put an explanatory forward in. Over to you to decide how to do it. So the good news is some of those are in our gift to change if it happens to be RNIB, or if there are 101 other disadvantaged groups that we would need to take account of, because I wouldn't want anyone to be excluded. If we can get the readership up to 3 rather than 2 beyond this committee, I'd be more than delighted to. But it's an interesting point, one that I've not heard raised before, Julie, but I will note it and feed it back to colleagues.
Thank you very much.
Yeah. Councillor Jeff Jones.
Yeah, thanks, Chair, and thanks, Ben. Always impressed really with this, even though I'm an ordinary person. I certainly don't understand the depth of this. But actually going down, you actually mentioned about technology, excuse me, silver bullet. Going down memory lane, there was a time, and I've got to mention it, where I think there were numerous accounting systems or technical systems in the council. How accurate, how do they actually manage to compile the accounts? If I can go back to, shall we say, pre-Capgemini, how was this actually drawn up, and how does it compare to what's actually happening today? You mentioned, problems with fusion and so on. Is it actually getting easier now? And how on earth do they actually compile accounts? shall we say, in the old days?
So starting with in the old days, and I am very, very old, 30 plus years ago, I did it on a mainframe and then transcribed it into a ledger and then typed it into spreadsheets to produce the statement of accounts myself in a large district council. Some of the reporting obligations have almost grown around. Well, now you've got whizzier computer systems, you can produce more information and slice and dice the onion. There's two further bits I'd want to answer. The first is, we had sped up significantly. In the first year we hit May was as a result of a series of automated roll-up reports in our own old Oracle, which automated almost all of the entries to enable the main accounts to be populated. It still requires some human interaction and intervention and judgment made, particularly on the cash flow statement in terms of the movements to and from. Cash is cash. The movement is straightforward. It's unpicking trillions of transactions, and I'm only slightly exaggerating. It's probably billions of transactions to try and get to a position. Some of that has had to be rebuilt in New Fusion. A couple of them don't work as well as they did in old. They are on our development schedule. They didn't stop us producing a set of accounts. We had one, for example, for the apprenticeship levy, which was an automated roll-up report that worked in old, don't work in new. It meant someone had to manually come to the figures rather than just press a button. But the main point I was making was not so much in terms of the internal automation. The internal automation in new Oracle and old Oracle, other than the development time frame, actually they're fine. My panacea for the AI world is actually all of the interactions for whole of government accounts. 95% of most of what we get in comes from RSG, NNDR redistributed, or us collecting NNDR and then handing it over to the national pool. Lots of it comes from 101 different UK, European previously. Some of it still comes from UK government. Welsh government is almost an embedded identifier in that, which was about automating the trillions of transactions between the various parts of DWP to us to housing benefits to NNDR. It's that bit. Now, that's often talked about, but there never seems to have been a unique identifier. It might need 1,000 codes in terms of an identifier, but in theory, to have perfectly consolidated national accounts, anything that came from UK government to Welsh government or from Welsh government to us and vice versa, if it had an absolutely unique identifier, one ought to be able to reverse the polarity. If it's a debit in that one, it's a credit in ours. Elements of that happen, but it was in that context, Councillor Jones, I meant I could see some role for alternative for artificial intelligence in terms of automating part of that. There isn't that material a change between old and new Fusion locally. There are a few teething issues with some workarounds. It's part of a development suite of things that we will look to improve, and our aim will be to have everything that we rolled up before to be able to roll up in new. But it was more around that. If you think about the jigsaw a bit, because as I say, you've got hundreds and hundreds of organisations. We have interactions with the NHS with the Welsh government. Then some of that must be capable of being tagged. There must be ways of having a unique identifier. It's often talked about, never seen it come in practice, but it's one of those things that's said, can get rid of most accountants, you can automate a whole raft of audit stuff, but you can't remove the personal element. The one saving grace I've got is the statement of accounts are at the end of the day as much art as science. So I doubt they can fully automate the Section 151 officer role. Some of you might quite like the role automated, and I doubt they can fully automate all parts of the audit role. And even if you can do some of it from the computer-aided assisted auditing techniques, you're not going to replace the independent personal view, subjective view of the Auditor General for Wales or the National Audit Office's Comptroller General. So it was more in that context I was referencing it, Councillor Jones. It might be a pipe dream, because I've thought, why wasn't that happening in the last 20 years? You think it could be with the alleged marvellousness of all of this artificial technology that can do everything. But as I say, some roles still require a little bit of a human touch. So there is hope for some of humanity and mankind yet. It's not all going to be taken over by robots quite yet.
Good. Yeah, that's good. Thanks, Ben.
Thank you. Any other question, David?
Thanks, Chair. Hi, Ben. Just a couple of points, more on a general basis, really. On page 9 of your report, I think, sorry, yeah, page 9 of the report, page 44 of our papers. In the last paragraph there, it talks about, obviously, the annual early retirement voluntary redundancy initiative as a cost saving. And I just wondered about more, obviously, this is an annual sort of exercise, if you like, on efficiency. But I just wondered in the interface between efficiency and workforce, whether we're looking at a long-term risk here in regard to workforce capacity? Thanks.
Apologies, I couldn't get my microphone off. The ERVR scheme is still very, very tightly managed, and every individual decision requires my personal sign-off, literally, even for someone on 2 hours a week, if they're a part-time cleaner, whatever it happens to be, all the way through to decisions for the chief exec of the day to depart. In fact, I think the only one that I can't do would, of course, be my own. So it is very tightly controlled. It is subject to a 3-year payback requirement. So I'm satisfied it operates in that sense. The other side of the coin is a difficult one. The workforce isn't getting any younger. I'm not getting any younger. None of us are getting any younger. And I think there is a workforce resilience issue. It is flagged up in my director's assurance risk statement. And it is a matter of concern to auditors when they look at financial resilience, although it's predominantly around the levels of reserves, how much cash do you have, what systems do you have. Local government, the last time I checked, shock horror, was not full of thousands and thousands of 18 to 25-year-olds. They tend to be a bit like me. They tend to be getting a little bit older. So I think there is that risk that's wider than just the ask around the ERVR scheme. But I think it's a real worry we have in the public sector and in local government in particular. There are real pressures on the workforce and the relative attractiveness or not to one part of the public sector to the other. Notwithstanding, locally, I consider us to be a good employer, but we are stuck in a national negotiating framework, and it does often take an awful lot of time for things to be resolved around pay and decisions, not in our gift, done nationally. And it clearly does mean that as the workforce gets older, there's not that many young people coming through the system in some areas, that it is undoubtedly a risk. But I don't see it as directly related to the ERVR scheme in itself.
Thanks, Ben. I suppose the second comment I've got is related to what we've just been discussing, really, and it's on page 51 or page 16 of your report. And again, it goes on about the pension fund deficit being lower than last year. And again, is this due to falling contributions because of a reducing workforce, or are some employees now opting for a more private pension scheme as opposed to the in-house scheme? Thanks.
So our pension fund scheme and its deficit and performance has actually been a tale of stunning success, as I'm sure Councillor Lewis would attest to, wearing a different hat. The deficit is very, very small in overall terms. And don't forget, local government pension scheme is a fully funded public sector scheme, unlike 99.9% of the public sector. I am incredibly proud of the performance of my pensions team, their investors, the pensions committee, and the performance has been astounding. Yes, there is a deficit at a time at which it is priced on current and future, and lots of people will comment on it. But I would rather have a £3 billion pension fund with a small notional deficit on it than a pay-as-you-go, non-existent one underwritten by UK taxpayers as a whole, which is what the majority of the public sector pensions landscape is. The contribution rates were reduced as a result of exceptional performance. We were funded at over 100% at the last valuation for, as I reported to council, and I think here before, for the first time in forever, literally in decades. There will be another revaluation at March 25, which will be for the following year. I would be frankly astounded if we weren't again back above well over 100%, but we do go super prudent to make assumptions on a whole raft of entries. Individual decisions by individual members. We've had this discussion previously about some choosing to opt in or out. No great evidence. There may be occasions when people choose to do that, but in terms of the accounts themselves and my discharging my duties, the pension accounts are separate. They are referenced in here. Actually, the deficit is a rounding error in the scheme of £3 billion worth of pension assets for the separate statement of accounts for the pension fund, which Councillor Lewis will have seen already probably at the pension committee / board. He may be able to correct me if I've misquoted that, but I'm pretty certain they've already gone or will be going.
Thanks, Ben. And just to reiterate again, thanks for your report today. Thank you.
Thank you everyone for those comments. Just to sum up from me, really, it's incredible that you've managed to deliver earlier than previous years. So well done to all the team and all others involved in it. I'd just like to sort of pick up a comment that's made on page 10 of your report, page 25, where it looks at the longer term financial outlook remaining incredibly uncertain for the council. And you refer to inflationary pressures, absence of longer term UK and Welsh Government spending plans, and the constraint that potentially, which is anticipated. Any idea of what the current position is and what the lie of the land is? Is that an improving picture or a worsening picture, or are you unable to comment?
I'm limited in how I can comment, but I will give my view as a statutory chief officer of what I know and what I don't know. And it's very simple. As at this point in time, the outlook, I know very, 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 very little. I can't comment on the political statements made by Welsh Government versus UK Government and all of that. That's for others to argue out. But let me just say where we are today. In a couple of weeks' time, Cabinet will receive first quarter monitoring report. There will be pressures. I don't think I'm going to be revealing anything in advance that there will be pressures in social care, homelessness, and pressures in schools that will need to require draws down from reserves. I'd be staggered if there isn't an authority in the land in that position in the current year. That position is exacerbated by here I am in September, 6 months through the year, not a hint of where my teacher's pension grant, because teachers' pensions, which is a pay-as-you-go scheme, not a funded scheme, rates went up substantially. I'm waiting for £5 or £6 million for Swansea alone. I see no ships. There have been some changes at a UK level and a Welsh Government level. I accept that, but I would prefer halfway through to the financial year to at least have had some confirmation by relevant governments as to what I'm getting, given I'm on a promise for several £1 million. I don't know the Teachers' Pay Award, which is due this month in Wales. I simply do not know it. I have no idea what the local government pay award is going to be. The employers have made a full and final offer. The unions, I would paraphrase, are not exactly happy with it on a national level, and I would expect that to remain unresolved all the way through to October, November, December. To go 9 months through the year with not knowing at least 3 items which are £5 to £10 to £15 million each is not a good starting point for anyone to be trying to manage financial control. I mitigate it by having substantial amounts in reserves, central inflation, contingency, etc. That then moves on to what is coming. There is a there is a budget due on the 30th of October and a promise of a comprehensive spending review concluding by the end of the following March. I'm not expecting anything from Welsh Government until December. I am only expecting to know a 1-year position by the time we get through to setting the budget at council in March. One of the biggest complaints of every treasurer in the UK is that whilst I anticipate when we get our financial resilience report, it will say, well, what's your 40-year plan? What's your 3-year plan with certainty? I've got not an indication other than everyone saying at all levels, tough choices and tough times, not a particularly useful phrase for me to sort of get behind the mechanics of it. And as I say, layer that on with uncertainties over in-year spending and in-year spending yet to be announced and backdated to April is the biggest complaint every treasurer of every local authority will have in the land. There is a promise of a return to 3-year spending reviews and a rolling programme. That was one of the LGA's, and it will even be one of the WLGA's biggest asks. Give us at least some forewarning to enable us to plan for things, because shock horror, if you need to do large-scale transformational change, it doesn't tend to be done inside a day. You end up having to do short-term salami slicing items because you haven't got the time to turn around the stuff if you know your final figures in February or March when you're setting the budget in March, and then they might all change 2 weeks later. It's not a happy place to be. The mood music coming from Welsh Government officials, and I can only rely on officials. I've heard nothing politically. And a layer on that with the announcements being made politically by UK government is that I do not see large amounts of money coming to the public sector, and I certainly do not see large amounts of money coming to local government. I am preparing for it being very, very difficult. My mitigations in the short term are I would rather be a treasurer with large reserves proportionately. large cash balances, a treasurer that borrowed every penny he needed through to 27-28. Those are the three things that at least enable me to sleep 3 winks at night rather than have no sleep as a treasurer. And I say it in my usual slightly unique style, but it is the reality of what does frighten every local authority treasurer. And I'm sure you could take it out of the local authority context and put it in other public sector bodies which don't even have the joys and delights of having a penny in reserves and live on a hand-to-mouth existence, who I'm sure are equally concerned. Planning in that environment is incredibly, incredibly challenging, and I'm sure that will be part of the discussion and debate when the Auditor General rightly produces in due course his view on the financial resilience of this authority and all 22 across Wales. And I'm sure it'll be very similar to the pronouncements I'm sure you've seen, Chair, on the lack of resilience and long-term outlook for the NHS, for example. It's a statement of the blindingly obvious, but leaving me in a darkened room blindfolded in the middle of a solar eclipse is not the best thing for any treasurer in the land. I'm sure you know exactly what I mean.
And I appreciate that, Ben. I think bearing that, the situation as it is, I think it's right for you to make that clear for the Governance and Audit Committee members to appreciate the challenges you've got and the difficulties in trying to, estimate or guesstimate, I guess.
I think the thing I would add, Chair, as I say, I'll just re-emphasise, I would still rather be in a position where I've got some short-term levers that I can give advice to members. That should give you some comfort. It shouldn't give you full comfort, but it will give you more comfort than many governance and audit committees, I'm sure. And I'm sure that point isn't lost on you.
Recognising all those factors that you mentioned, would it be appropriate for us to be kept up to date with anything that's going to really break the bank, so to speak, recognising you've got those reserves, etc.?
So yes, I mean, so my pronouncement as of today is I see nothing that will affect 24-25. My next likely position statement, which will be a joint one by officers and members through the leader, will be the first week of November council. I think it's a council on about the 5th of November. It's around that time. It's about a week after we will have had the headline announcements from UK budget, whether they'll have filtered down sufficiently, but I am sure the leader and I will need to be giving some sort of update. It will be a verbal update to the council in November because there won't be time to produce the papers in advance, but that'll be the first point at which we're not talking about the hypothetical dark difficult choices. That'll be the first hint. I'm not convinced we'll know anything until December in terms of it put in a Welsh context, because to be fair, officials have indicated they need around 6 weeks to triangulate the Barnet consequentials and such like. But yes, if there were anything that led me to a view that I would need to warn you as a committee that you were at grave peril, having due regard to the levels of reserves you had, it would be incumbent upon me to draw attention to yourselves and to Cabinet, but without prejudging or pre-announcing anything that I might give in terms of advice to Cabinet and Council in due course. I could foresee no such never event occurring in 24-25, having due regard to our treasury position, our borrowing position, our cash position, our pre-borrowing position, our cash position and our reserves position. I am as assured as any treasurer in Wales. I have no doubt of that, Chair, but I will keep you appraised if that were to change at any point.
Okay, lovely. Thank you so much, Ben, and thank you for the papers. Quite challenging times, though. If we can move on then to Jonathan, I think you're in with us now.
Yeah, my apologies, Chair. I was here. I just couldn't get into the meeting earlier, so my apologies for being late. But
Jonathan, we're going to take both of your reports next. So that would be the agenda item 4, which is the anti-fraud plan, and the annual report.
I'll do the annual report, which is item agenda number 6, obviously, because then that forms the basis of the planning item agenda number 4. So I think the salient points to draw out from the report this year would be firstly the staff structure. Two new officers were taken on. They started in January 23, and the manager post then from the 3 existing staff was appointed then, appointed in May. So we're back to a quorum of 3 staff again, 2 staff and a manager, which is the sort of status quo of what the team was originally set up for back in 2015. Our caseload has increased. It's up from last year, but I think it's doubled from sort of pre-COVID days. I don't see any issues with that at this moment, as we're managing that caseload effectively. We've also had significant increases in the number of requests we deal for under DPA, GDPR, mainly from the police. That's gone up significant, but again, I don't see any issue. It's being managed effectively. It's being done. And I'm also aware as well that you can have major incidents and big police operations which will skew those figures. So I'm not alarmed about increases in those figures at all. An example would be when we had the gas explosion in Morriston. For a period, the staff were answering police queries sort of every 2 minutes, where they were trying to find out who lived in what house, what children were living in the house, where did the children go to school, all these sorts of things. The police were coming to us, so that distorts the figures. And all I think the committee needs to be happy with is, look, we're managing it, we're dealing with it, there's not a problem. So if we go forward then, joint working as previously reported last year, it restarted in 2022-23 after problems with COVID. I looked at it at the time and realised there would be an increase in cases, which I'm glad to say there has been. And there's an overpayment. The realised overpayments this year increased by 40%, which shows we're going back in the right direction with regards joint working investigations into council tax reduction fraud. National Fraud Initiative, that is yet to be concluded. We're not far off it, but that should be concluded next month or the month after. And I'll look at providing a report of my findings in the mid-year report later on in the year. We've still got about 40 or 50 cases outstanding, but we'll deal with them by then. And I'm hoping by the time I report back to committee on the findings, the Auditor General for Wales would have published his report as well, his or her report as well. And I can give some sort of correlation between the reports as to where we are on a national basis in terms of NFI. Internal investigations, I'm pleased we're having drop year on year with internal investigations that we're doing. I think a lot of it may be down to changes in the working practice, more people working hybrid, different changes to the flexi arrangements. So it's pleasing that it's going down, but we will continue to priorities where internal investigations are needed. Housing has been, I think, it's been one of my most pleasing things through the year. We've always had problems dealing with housing, and over the COVID period, we gained a big backlog of cases which we were not dealing with at all whatsoever. The new staff have come in, Ian and Nicola, the new investors have come in, and they've hit the ground running. And one of the first things I did to them is I went, there you go. Can you deal with all that for me? And they've gone away and they've dealt with it effectively. They've looked at it and said, right, this is a boots on ground exercise, knocking doors, old-fashioned investigations. And through the first year of them doing that, we managed to get 7 properties back into housing stock, which I think is significant considering I think we may have had 1 or 2 in the previous 9 years. Fraud awareness. Following recommendations by Audit Wales as part of their all Wales counter fraud arrangements in local government, we were requested to do fraud awareness online training product. We sourced that successfully, and that went online in 23-24, and that's available to everybody. So if I go to the review of what we've done against the plan from 23-24, of the 8 objectives, all the objectives were fully achieved. I could go on to discuss the plan now, but if anybody's got any questions at this point, I'm quite happy to take them, or you can wait until I've actually spoken about the plan going forward.
No, I think we'll take questions on paper 6 now, if that's okay. Okay, opening up for questions. Any questions from around the table? No. David.
Hi, Jonathan. Thanks.
Hello.
Thanks for both papers, and particularly into this one. And I know you and I had a discussion last year about this. The tables that you put out on page 236. Let me just get to them. Yeah, the tables here. There's 1, 2, 3 tables on page 236.
Yeah.
I just want. I mean, the narrative's good. You know what you're putting across in the narrative is great in the report. but I just wondered if there's a way of actually demonstrating
Yeah.
through a flow chart or bar chart or things.
No, I think I know exactly where you're coming from, Gordon. It was something we discussed this time last year. And the fact of the matter is, I went away and had a look to see if I could provide you with any meaningful statistical information which would give you sort of what you would like. And the problem I got is because I deal with such a wide and varying array of different types of cases, it's extremely difficult. I've spoken to colleagues in other authorities about this, and where they don't deal with anything like the complex nature of what we deal with. So, for instance, one of my colleagues I spoke to, she deals with council tax reduction fraud. So she would be able to give you a table saying, we have had 100 investigations into council tax reduction fraud. Of those, we rejected 40 of them from the start. We investigated a further 60. Of the 60, there was no action in 20. 20 we realised overpayments only, and 20 we took on sanction action. Now, that is the sort of thing I'm under the impression that you would be looking to do. And that's great in that area. But then for me to try and do it in 7 or 8 different areas and give you tables, it's just something, I'm not going to give you any effective statistical information which will let you go away and say, okay, draw any sort of conclusions from that information. All it's going to do is it's going to raise questions and add confusion. The only way I think to go forward in the way you're talking is where I do the online training courses every year, and if I provide examples of the work we're doing, that may be a more meaningful way of presenting that information without drawing far too many conclusions, unnecessary conclusions from meaningless statistics I would be providing.
Yeah.
Can I interject
Yeah.
a minute?
Yeah.
I'm just looking at your report on 571. You've got a review corporate fraud administrative management system, found it was not fit for purpose.
Yeah.
And although other external products are available, they're not cost effective. Is it the lack of a system that you've got?
It is a lack of a system. I did go out, I did look at what was being done internally, and I did go and look what was being done externally. I did find a product out there which would effectively allow me, I thought, to manage the workflow of the team. Unfortunately, that's going to cost a lot of money, and I did not think I could justify going to Ben and saying, Ben, can I have 6 to 10 grand to buy a system to effectively manage my caseload more properly? And I didn't think the statistical output it would give me at the end would help me draw conclusions to make me think, can we do things better from those statistics? It just didn't add up. So I didn't think it was from a taxpayer. Forget about Jonathan Rogers, corporate fraud manager. From a taxpayer, it wasn't value for money as far as I was concerned, and I was quite happy with what we were doing was sufficient enough to going forward to help us.
Okay, I think I need to pick that up outside of the meeting, perhaps with a more detailed conversation with you, Jonathan.
Fine, yeah, by all means,
Ben,
so.
Because I think there may be other options there that we can talk through that would make things a bit easier for you. Is that all right, David?
Yeah, I'm happy to do that.
Yeah, I just reiterate that really, because I think we're missing a trick here really, because the work you're doing in the narrative, I think you could demonstrate that in a databases, but equally financially as well, of obviously the money you're saving the authority or what you're recouping really through the anti-fraud work that you're doing.
To be honest with you, I'm always open to suggestions, and I'm open to anybody, if anybody wants to come in and help me and look at the data that I've got, the raw data, and if they think, look, you can present this in a much better way, which would make it look a lot better for you and give more better statistics for committee to follow, I'm open to anybody who's an expert in that area to come in and help me.
Okay, thanks, Jonathan. Okay, thanks.
Okay. Julie Davis.
Thank you, Chair. Jonathan, it's just a small point. In your report in paragraph 6.3, you say that the only activity that was not fully achieved was raising awareness when no training was provided to members of the Governance and Audit Committee. Now,
Yeah.
I I realise this report is for 23-24 and the training has recently been delivered, but in the in Appendix 1, in
Yeah,
the
it's an error.
activity, you stated as fully achieved.
It's an error on my part. I wrote the report because I said I hadn't fully achieved that. When Simon took one look at it, Simon said, no, you did fully achieve it. It wasn't your fault that the training wasn't organised for you. A slot wasn't arranged for me. I did the fraud awareness online training, went online. He said, as far as I'm concerned, that's not your fault. You've achieved what your objective was. You can't be held accountable for what others did. It's an error from when I wrote the report, from when Simon came along with his big red pen through my report and said, no, you need to make some changes. So it's my error in that. Sorry, Julie.
Thank you for clarifying.
Okay, then, if no further questions, then we'll go back to agenda item 4.
Okay, thanks, Chair. So in terms of the plan, the sort of responsibility of the team, they don't change. The areas that which we investigate, they don't change. So the objectives that we will have won't really change much. It's just the sort of narrative within those areas of where we go. So there will be 7 objectives going forward next year. Again, the internal investigations, as I previously said, this is what we were set up to do. That's why we come under audit. They will be prioritised and conducted in haste. They'll be put to the front of the queue. It's as simple as that. I can't get away from that. Whatever comes in, we'll deal with. Joint working. Well, joint working was the second thing that we were set up for. Council tax reduction fraud. So that comes as the next priority, and we will continue to try and enhance relationships with the Department of Work and Pensions. We will look to try and, rather than wait for the Department of Work and Pensions to do all the work and invite us back in, we will turn the matter around and we will look to do as much investigation work and then invite them in. So a more fair joint working, if you like, to use a phrase. So that'll come next. Council tax. We've been quite fortunate with council tax in the fact that with the implementation of their data tank system, single person's discount fraud they're raising significant revenues in terms of single person's discount fraud. So it's not as high on my agenda as it once was. However, we still get investigations, we still get allegations, and we still need to conduct our own investigations, because as part of the data that we're getting, that may fall outside the remit of the public source data which Data Tank utilises to produce all its facts and figures. So we will continue to do that. On top of that, Data Tank will also produce cases where single person's discounts in payment, but also council tax reductions in payment. Now, that is quite a complex area, because if Data Tank is saying this person is claiming benefit on their own, but public source data is saying that they may have a non-dep or a partner, those matters will need to be looked at, and you can't just turn around and look at them on a bulk approach. They will need to be looked at individually. So whatever comes our way, we will have to deal with going forward in terms of council tax. Housing, I think housing, I want to labour the point, but it's been I'm very proud of what the team has done in terms of housing this year. With what we've done in terms of housing, for every probably time we go up and speak to a district housing officer over an allegation, we'll probably get 2 or 3 back. The housing officer will sit there and say, oh, by the way, thanks for helping me on that. Oh, by the way, we've got a problem in this house over here. We've got a problem in this house over here. So it's all about making sure we continue that progress forward and utilising all the progress we've made this year with all the contacts we're making in housing to progress that further and make it better, even better. So that'll be housing. NFI, I think I've spoken about NFI. We're hoping to conclude NFI this year, and then we've got to prepare for NFI going forward. That'll come in now in February, March time, where I'll need to start preparing and looking at the matches we've got, collating the information, ready to send it out to the individuals responsible within the authority. So that'll be done this year. And then lastly, I think the big thing for me where I want to go this year will be Blue Badge, because Blue Badge has always been on the plan. And it's always been ticked on the plan. Have we effectively dealt with Blue Badge? Yes, we have, because we've dealt with everything that came our way in a satisfactory measure. However, I want to take that matter further this year. Blue badge is quite a complex area for the authority, in the fact that we go one section, the contact centre will issue blue badges. Then we've got parking enforcement of the people who go out on the street, and they will enforce the use of blue badges on the street. The problem we've had is I can't see there's ever been any joined up thinking between those two sections. And there certainly hasn't been any joined up thinking between those two sections and corporate fraud. So going forward this year, I've sat down with the relevant sections and we've agreed that we will produce a framework, an enforcement framework going forward. So each of the three departments knows exactly the responsibility of each of the parties, with a view then that we're going to look to start prosecuting and taking SACSA action against blue badge offenders in certain cases. And hopefully at some times, I know he's not here today, but we'll look to do proactive exercises in certain areas where we know we've got massive blue badge abuse on certain occasions. But that's all for me for the second. I'm open to any further questions about the plan.
Thank you, Jonathan. Any questions around the room, David?
Sorry, Jonathan, it's me again, David.
That's fine. You don't have to apologise.
I'm just trying to tap into your vision and your enthusiasm. And as I mentioned in the last one, you talk about the flow chart. But on paragraph 2.1 in this part, you mention about the moving from a reactive to more proactive perspective, which is great. That's a great vision and a great aim. And also you mentioned about, not in this particular paragraph, but you talk about a deterrent effect within the workforce. So my question is really same as last time, really. How are you going to show that you've achieved that, the move from reactive to proactive, and obviously the deterrent effect within the organisation? Okay. Again, it's not a criticism.
No,
it's very much.
No, it's right.
It's very much a supportive view.
I'm glad you pointed out that the only way I can show a proactive thing is to come in front of audit committee and say these are the proactive things we've done. I've never really come in front of audit committee and said that, because I've never done anything proactive until we started doing the short-term let exercise. We did that last year. We've done it again. We did it the year before. We did it again last year, and we plan to do it ongoing, because that is not a massively resource-driven thing to do, as opposed to NFI, which is a completely proactive thing that we do, which is a huge amount of work and a huge exercise, but then it brings in results as well. So the only thing I can do is say to you is, when I get the chance, when I see a niche in the market, an area, we can do something there, we can do something proactive there. What are our resources like? We've got the resources, let's do something, or let's put some time in the account to do something. We will do it. What that will look like, I've got no idea, but we will do it when the opportunities arise. And when they arise, you'll be the first to hear about it when I put it in the annual report. In terms of the deterrent, the only way to put deterrence in is to publicise the stuff that we do. Some things are newsworthy, some things are not. Some things the authority would like us to publicise, some things they wouldn't. When we've got things that I feel are newsworthy and we can show them in a positive light to the authority, which will act as a deterrent, whichever form of media that would be, whether it be through the local press, whether it be through Martin's blog, whatever, I would certainly try to use that as much as possible. It will always be an aim, but sometimes my hands are tied in doing things.
Thanks for that, Jonathan. I think what I'm looking at here is a perspective of your operational side, your day-to-day operation, what you're doing and what comes through in the narrative. But also, I'm trying to tap into your strategic side as well, because I think going forward, you need to have that demonstration of the shift, not just the day-to-day, what's happening and what you're achieving. Okay. It's where you're going as a service and as an individual as well.
I'd love to sit down with you, Gordon, and say, I have a strategy. My 24-25 strategy is to do this, and I'm going to manage this strategy by doing this, and this. Unfortunately, I have no idea what's going to come through my door on a daily basis. I have no idea on a Monday morning how many allegations of fraud and the complexity of those allegations of fraud will be. I will always be a reactive service. However, when I get the chance, when I can, I will try and do something which is proactive. I can't strategically plan for it because all my time is spent on planning to do the reactive stuff. I can't get away from it. I wish I could. Unless somebody wants to give me an infinite amount of resources, which I know they want to do that, it just can't be done. I'd love to, but I can't do it.
Thanks, Jonathan. I mean, obviously, we'll pick.
I'm just trying to be brutally honest with you because that's the way it is.
That's fine. That's fine. Again, and obviously, just to feedback to yourself, obviously, this is a very positive report, as it has previously, you know. But it's just seeing how you go forward, and obviously the aims you've got in this plan and how you achieve them.
What I would say, Gordon, is if you ever want to pick up the phone and come and meet with me and try and give me any advice on what you think would help me going forward, I'm quite happy to do that as well.
Okay. Thank you, Jonathan. Thanks again. Thank you.
Ben, do you want to come in here before we go on to Councillor Leslie Walton?
So yes, it was just to follow up on what Johnny had said. Look, you can't doubt Johnny's enthusiasm, and he is right. He can only work with what he has got, and there is more than enough work to keep him and a very small team occupied, which is, I think, the context in which he is referring to. But for the avoidance of doubt, given the outlook for public finances is not great, the likelihood of me having any significant cash to spend on back office functions is frankly sub-zero, but it is not lost on me nor Johnny and the comments made that there is a value in the deterrent effect. There is a value, and I agree entirely with Johnny on the bit which is, to some extent, what gets in the paper will depend on what comes here and what he reports on. Don't want it to be too salacious, but we do want it to be honest, and some of the things will be of more interest than others. It's always a fine line, isn't it? From a corporate point of view, for myself, I am happy that we have a funded, separate but embedded fraud function. Not everyone does, which adds some value, but there are times when it's nice that there's not too much found. It would be nice if there was a big juicy one, isn't there? Because it would be on the front of the Evening Post or somewhere else. So I think that's the context in which Johnny's referring to it. To some extent, it'll depend what it is, but that visibility of the function, the enthusiasm of the small function, cannot be doubted. And I sat listening intently to his enthusiasm and the questions from the lay members, and you can't doubt that. But it is a fine line, and what will get reported will get reported. I'm sure there'll be something reported on this in the papers, because this is the bit that's often more interesting than some of the dry technical stuff that I and others have to do. But I would want to place on record my thanks to the small team. It does what it can with what it's got, and to some extent he's absolutely right. It'll depend on what comes through the door. In one sense, don't want a big juicy one, do I? But in another sense, if it comes, we will deal with it because we have to, because that's how we get that deterrent effect, and know that if something happens, we have some resources to look to react to it, and when there is time, to proact to it. I mean, that's the only point I wanted to make, Chair.
Thank you. Councillor Leslie Walton.
Yeah, well, one point I want to raise and repeat something that I said at the training session on Monday was how pleased I was that one of the examples, John, that you gave actually showed that not only are we bothering to come down on fraud, but even so, it was the housing example, we're also helping people. And that to me was such a positive thing to do. And it does us no harm whatsoever to have that. Also, if you like, a side issue, that we're not just being coming down and prosecuting, but we're also helping residents, which I think does us and our reputation a lot of good. On that, it just struck me, you came out with some great examples of the work you do. So when it comes to us being reassured that what you're doing is making a difference, maybe those examples could be put, probably not so much in this report, but in the other one, the report agenda item 6 in future, because I think figures are all very well, but sometimes I think the narrative, particularly those examples that you had on Monday, tell an awful lot more, because they give meat to those figures. They give actual examples of how you're making a difference, how you're doing what you're supposed to be doing, but also helping people and also saving the council money. So I'd recommend put those examples in future paperwork and future annual report. Thank you.
Thank you, Leslie, and I'll put that for consideration to Simon and Ben.
Thank you, Leslie. Making reference to the training that took place this week, it was very insightful, and again, your enthusiasm shone through with the training that we all had as Governance and Audit Committee members. With regards to the plan, can I just ask one question? And it's around, you mentioned, a number of areas that you're going to look at. Within your procurement and the work that you'll be doing around that, will you be including the potential fraud around poor contract management?
I will not be doing anything proactive in terms of procurement. Procurement is on there because it's part of my remit to deal with. And if poor contract management comes across my desk within the year, it will be dealt with. But we will not be proactively looking at procurement from a proactive measure, if you like.
Okay, because I'm just minded of the significant amount of money being spent in capital programs across Swansea City. The potential for that, my head was quite high. And I've also come across a central government document around procurement, fraud, corruption and risk. And it's deemed as one of the highest risk areas for.
Well, I'm not sure if that is a corporate fraud mandate, or is that more of an audit mandate? I don't know. Ben's got his hand up. Perhaps Ben would like to come in.
My comment was going to be twofold. You're right to some extent, Johnny. There's a risk of fraud in anything that is done, so there is always an element of it. But I'd be more with Johnny on this one, that there is an part of the audit universe, but there is also, as you are aware from the stuff that we flagged up for 2 or 3 years on the trot in the annual governance statement, and you have had updates and concerns around broader procurement compliance or not, which remains very significantly raised and flagged to the corporate management team. The head of procurement does report directly to me, and it is well and truly on my radar as part of that wider assurance. I'm not ruling out that there might be some element of fraud to be reviewed or fraud risks to be reviewed, but it's most definitely within the universe of stuff that my corporate management team colleagues and I look at with the head of procurement, and the committee is well aware of some of these matters in terms of compliance matters flagged up in the annual governance statement. But it doesn't rule out that if there was something that led us to believe that there was something specifically to look at, because I do accept the chair's point that it is high value stuff, then it's never ruled out. But I'm more with Johnny on this one, that there are sufficient areas of coverage throughout other aspects of the work that I either directly control or indirectly control, Chair.
Okay.
One other thing I'd like to add, Chair, is over the 9 years is what I dealt with in procurement. I've tended to find that most things were a breach of contract, which is a civil matter, rather than a criminal matter, which felt outside the remit of corporate fraud. So my hands were tied and say, look, yeah, I've got a problem, but there's nothing I can do about it, because I deal with criminal. I don't deal with civil matters, and it's a legal issue you've got then, rather than a fraud issue. So that is a small caveat I'd like to say. I'm not saying that in every case, but that has been one of the things I've always found when getting involved with procurement cases over the years.
Okay, I'll forward you the document I've been looking at.
Please do.
And you can have a look at that then. Okay, and finally, just to let you know, I'm attending an All Wales Joint Audit Committee training session tomorrow, and there'll be a number of subject areas on the training session, many of which are related to fraud. So I'll feed back into you if there's anything I think would be of interest.
Yeah, would be grateful. Would be very grateful.
Okay. But thank you for your reports, and I think we've been asked to approve the counter fraud plan. So if we can take a vote, please, on that. I think you better do it that way.
Okay. Okay, thank you, Chair. I see the recommendation on page 6 that the committee review, discuss and approve the anti-fraud plan for 24-25 as at Appendix 3. Gordon Anderson. Julie Davis.
Yes.
Councillor Paxton Hood-Williams.
Approve.
Councillor Jeff Jones.
Yes, approve.
Councillor Mike Lewis.
Approve.
Chair.
Approve.
Councillor Sam Pritchard.
I'm happy to approve.
David Roberts. Councillor Leslie Walton.
Happy to approve.
Thank you, Chair. That's unanimous.
Okay, thank you very much for that. And thank you for your attendance, Jonathan. If you want to leave the meeting now, you're quite welcome to do so.
Thank you, Chair.
If we move now on to agenda item 7, it's the internal audit monitoring report. We've had apologies from Simon, so Nick, welcome to the meeting. And if you can take us through the internal audit report, please.
Thank you, Chair. Apologies in advance, as we're probably going back to the dry and technical areas here for these reports. But yeah, 2 reports. Firstly, agenda item number 7, which is our internal audit monitoring report for Q1, pages 251 to 280. Yeah, there's lots on the agenda, Chair, so I'll try and just highlight the main areas.
Yes, please.
Yeah, if members can turn to page 251 of the reports pack. So this report shows the audits finalised and any other work undertaken by the team, from the 1st of April to the 30th of June. Section 2, so a total of 16 audits were finalised during the quarter. The audits are listed in Appendix 1, which also show the level of assurance and the number of recommendations made against those reports. Appendix 2 provides a summary of the scope of the review and any key findings that we've picked up. So 2.2 is a quick analysis chart of the 16 reports that were finalised. So you can see that 7 had a high assurance, 8 a substantial assurance, and 1 a moderate assurance, assurance. There's a total of 86 recommendations were made and management agreed to implement all of them. All recommendations, as committee are aware, are classed as either high risk, medium risk, low risk or good practice, and underneath there's a table showing a breakdown of those 86 recommendations. Moving on to 2.7, so that the plan to date then as at the 31st of June, the end of Q1, so 17 audit activities had been completed to at least draft report stage. An additional 32 activities were in progress at the end of the quarter. So as a result, approximately 41% of the plan had either been completed or were in progress. Moving on to 2.8, so as stated above, 1 audit report with a moderate assurance level was issued during Q1. And it's been summarised in the table below. So the main points we've picked up during the review are included. I'm not going to go into any further detail here as we have got officers due to attend committee, I think it's in November. So the points are there underneath in the table. Moving on to section 3, so additional work undertaken by the team. You can see that we tested and certified the following grant. Section 4, we also undertook some follow-ups of 3 moderate reports that we'd issued previously. Again, you can see that the 3 are listed below, which are Christ Primary School, Catering and Cleaning, and the Western Bay Service. Moving down to section 5, which is at the top of page 257. So we also look at our standard follow-ups, and 9 audits were followed up during the quarter. A total of about 100 recommendations were checked with management, and only 1 was found not to be implemented. And the reason for that is listed in Appendix 5. And that's it for that report, Chair. We've got appendices. So we've got Appendix 1 lists the 16 audits that we finalised in the quarter. Appendix 2 are those audits with the audit scope attached and any key findings that we've picked up. Appendix 3 is the annual plan as at the 30th of June. Appendix 4 are the 9 follow-ups that we checked. And Appendix 5, as I said earlier, is that 1 recommendation that hadn't fully been implemented. So Happy to accept any questions on that report.
Thank you very much, Nick.
Thank you.
Any questions? Councillor Leslie Walton.
Yeah, thanks, Chair. Two things. One, please don't feel you need to apologise when we've got lots on the agenda. I personally think that this report, when it comes up every quarter, is one of the most important reports. So I want to make sure we do it justice and don't rush through it. So you don't need to apologise on that score. The actual point I want to raise is referring to the moderate case. On page 254, the very first key point, I was interested to see that about 1,500 managers should have been getting training and only about 350 had actually done this. Now, I know what it's like because I try to keep up with my training, but to have the self-discipline to make yourself go and do e-learning training is quite difficult because there'll always be something that keeps pushing that out of the way. And it strikes me that the fact that that's not happening actually leads to why the other points are not happening. They're a direct trigger to the rest of this report. And I did wonder if it might be worth looking at actually providing timetabled online training, which is far easier to book and far more likely. You don't have to have so much self-discipline because it's on your timetable. So I just wondered if that was worth feeding back, because it strikes me that might help get a lot more of the managers to do the training session. Thank you.
Yeah, thanks, Councillor Walton. Yes, certainly something I can feed back to Rachel. I know the service is carrying out a review, of the sickness absence procedures and policies. So yeah, happy to take that back.
Okay, David.
Thanks, Nick. Just picking up on one point on 2.6, which is, I think, is 253. Yeah, 2.6. We've spoken before about vacancies and everything, but it'd just be an interesting thing. You said there that the 68 days were lost in Q1 due to the vacant post. But equally in future reports, I think you'd be actually have the actual available days as well to see what the percentage split is in each quarter. So that, yes, there's a 68 days vacancy, but how many days were available to the team just to get the comparison?
Yeah, thanks for the question, David. I'm not sure if we did discuss this in a previous meeting, possibly with Simon, but yeah, I can take that back and whether we can do that comparison, in future reports.
Yeah, good, excellent. Yeah, thank you. And the only other one was picking up again, like Councillor Walton, really, on that table at 2.10. Obviously, it's a bit concerning when it mentions mandatory, but picking up Councillor Walton's point, I think it is online training you're talking about here, and the numbers and everything. Am I right in thinking you said there's somebody's coming in November to follow up on this?
Yeah, I believe.
Okay.
I believe the head of services is coming in November to give an update report to committee, on what they've done so far since we've undertaken the audit. Yeah.
So that's covering all the subsections in this table.
Everything to do with what we've looked at for that audit review. Yeah, David.
Okay, thanks, Nick. Thanks for that clarity. Thank you.
Okay.
Julie Davis.
Thank you, Chair. Nick, thank you for the report. I find it a bit worrying that the primary school procurement review is still showing schools that aren't complying with CPRs, but it extends further than that, because in your report, the next service, which is Vulnerable Learner Service, part of the ALNU, there are procurement findings in respect to that. So I understand there is an escalation process, but I'd like to understand more about why the message isn't filtering down to individual schools.
Yeah, thanks, Julie. It's difficult because, as I said, with schools, we continually You know, I know Kelly's team continually run courses for schools, and we continually pick up these problems, and they're all reported to management. It's just the big areas that we look at, certainly expenditure, certainly in schools and other audits that we undertake. The likelihood is there are going to be more recommendations in those areas because they are such large areas that we look at, and we've got multiple areas that we test within, you know, within those areas. So yeah, it's I'm not sure, to be honest, but it's something that, you know, is a key risk that we look at, and in all our audits, if there's any expenditure, we've got quite a detailed set of tests that we undertake, whether you know, with contracts and with general day-to-day spend. So you know, we're quite hot on that subject, and of course, you know, whether it's due to staff resources, you know, I can't really, you know, put my finger on it, but it's certainly to, you know, to reassure a committee that it's quite a large part of our tests when we're doing any sort of service audit or contract audit.
Thank you. Perhaps I can bring Ben in on my question. In your report on the Finance Directorate, Ben, you mentioned that there's a service area risk in terms of procurement, that Oracle Fusion can't provide data on cumulative spend with suppliers, and that the Council could be in breach of UK public contract legislation. Would schools' expenditure be incorporated into that total? And if so, it's a higher risk, I think, perhaps than just a service risk.
So unfortunately, because we have loose federation, schools effectively are cash book management. It's part of the thing that causes Nick difficulty. It would equally cause me difficulty. My flagging up through Chris Williams, who's flagged up the procurement issues in terms of one of those, when I referenced a whole raft of things that we got limited reports compared to what we had previously, it would not include schools because the Oracle ledger is not the primary ledger for schools. It remains only a secondary ledger. So you're right to remind that the two things are different, and I think it links with Nick's point, which is to some extent our cash book management schools, they all do their own thing. They're still bound by our rules, but they wouldn't be covered by that particular point because that's only referring to our primary ledger. We use main Oracle as the secondary ledger for the schools' SIMS accounts and consolidate them in that way. It doesn't provide us with a central intelligence because schools are not fully on Oracle. We do it the other way around, as it were. We put their entries in to get to a consolidated set of accounts. So it's not relevant in that sense, but it is a valid concern, and I think it's part of the issue Nick has, and in Kelly would, I think, acknowledge the same, that if you give schools lots of flexibility and freedoms, it is hard to then centrally control them, but we almost come in on an annual basis anticipating some of these things, which is why it's of concern to the committee. And as Nick has said, we almost routinely expect it. We shouldn't be in that position, but for whatever reason, we do seem to be in that position. It's got to be partly because of the freedoms and flexibilities that schools have. And to be fair to schools colleagues, you know, your average primary school is relatively small in terms of back office function. It doesn't excuse a requirement to comply with our rules, but it probably doesn't make their life easy when I try to think of your average primary school and how much back office capacity they've got. But it is right that my audit team will continue to flag up and say if they're not happy, they're not complying, we will continue to report it. But there is probably, we've not helped ourselves in terms of the way that we are loosely federated, as it were, and give maximum flexibility to all schools to spend their own money.
Thank you.
Okay, thank you. Are there any questions in the room? No, I can't see any further hands up. Can I just ask, with regards to the ongoing issue with the schools and procurement, do our reports go to the governing boards of the schools?
Yeah, so when we and I'll touch on this, Chair, in the next report that I present. Yeah, so all reports that are issued to schools are also issued to the chair, the governors, and education management, including the director, and they are also required then to present those reports to you know, the governing bodies then and minute those. So we do check them, and there's a couple of paragraphs in my next report confirming that, you know, all the reports that we produced last year have all gone to the chairs of governors and all been reported to the governing body.
Thank you for that. And just a point on the management of absence report.
Yeah.
It's been, the right questions have been raised, but can you confirm, is the issues that you've identified due to a systematic or a systems failure with the systems that's being used? Because it was Oracle EBS, I think, and now it's Fusion. So is there an issue around that and any workarounds that has caused this to emerge?
To be honest, Chair, I'm not sure, and I'd need to speak to Rachel to get a little bit more detail on that. So I'm not sure if it's anything to do with the upgrade from R12 to Fusion, but I'm sure that Rachel will be able to answer that in November. But I mean, I can get that if you need to get that answer quickly. I can speak to Rachel towards the end of the week.
I think the only reason I ask is I recall the former system, they used to produce breaches reports, and the
Right.
breaches reports used to go to managers, so they knew what the position was, on a day-to-day basis. So I don't know whether Fusion still does that.
Yeah.
Maybe that's what's
I know there are some functionality issues with the new Fusion system, possibly to do with breach reports being sent to managers and so on. But again, I'm not exactly sure what reports we can get now and that we used to get. Again, I probably need to sit down with Rachel and go through to see if those reports are now available in Fusion.
perhaps when the director comes to the next meeting that he or she can pick that up.
Yeah.
Okay, that's lovely. I've got no further questions on this paper. No other questions. Can we move on then to the next agenda item, please, which is the schools audit, Nick?
Yeah. Okay. Thanks again, Chair. So agenda item number 8. So this report provides a summary of the school audits and thematic reviews undertaken by the team last year in 23-24 and identifies some common issues found during those reviews. So if I could direct members to page 284 in the reports pack. Just quickly again, 1.3 shows the scope of our audits when we're undertaking individual school audits, and you can see all the areas we look at. 1.5, so last year we continued with the thematic review approach for primary and special schools, and we covered 2 key risk areas of DBS checks and the review of multi-pay card spend. Happy to report to committee that we successfully completed both thematic reviews across those 2 areas, and furthermore the team has also finalised reviews for 2 primary schools and 4 secondary schools during the year. I was just going to reiterate 1.9 really about what happens with the action plan once it's been agreed with the head teacher, but I've just gone over that to say that it does go to the governing body and the education management. Moving down then to section 2, summary of the findings. So 25 primary schools and 1 special school were included in the thematic reviews of DBS and multi-pay card expenditure. We also completed 4 individual secondary schools and 2 primary schools where site visits were necessary. So it's pleasing to note that both thematic reviews, where a report was issued, had a substantial assurance rating. 2.4, the 4 secondary schools were audited in year. 1 was awarded a high level of assurance and the other 3 awarded a substantial level of assurance. So continues to demonstrate that the secondary schools in question are being managed appropriately and operating effectively. There were 2 primary schools that we audited during the year. They were awarded a moderate level of assurance, and both at the time of the report, writing this report, were subject to follow-up reviews. My previous Q1 report confirmed that Croyce Primary has now been completed. The follow-up there was looked at and the good progress had been made. Clydach Primary is the other school, and that has been, the follow-up's been booked in for the end of September. Moving on to section 3, primary schools. So just to provide the committee with a little bit more context of what we covered during those two reviews. So DBS, we checks were undertaken, and we looked at the last 3 years for all staff employed in the primary schools in that sample and special schools, and we looked at a total of so point B looked at a total of 1,098 DBS records were checked, and we found that there were expired DBSs recorded for 6 staff across 4 of the 26 schools, which is a non-compliance percentage of 0.55. The details are listed below, but just to give you an update on the current situation of those 6 staff, 3 now have been renewed, 1 is still on long-term sick, 1 is on a career break, and another employee has left. So moving down to 3.2, thematic review on multi-pay card expenditure. So we undertook this review to make sure that the correct procedures were in place, included detailed testing on multi-pay card transactions and reconciliations being undertaken by the schools. And again, the findings of that are listed below. Section 4, secondary schools, have said that we visited 4. There was a total of 48 recommendations made, which is about an average of 12 per school. And the table in 4.4 just lists the areas where those recommendations fell. So you can see again really that procurement, expenditure and multi-pay cards identified that 49% of our recommendations were made in those areas. Moving down to section 5, special schools. So no special schools were audited independently. The one that we looked at was part of the thematic review. Section 6, developments and other work undertaken, just draw members' attention to 6.6 that we'll continue to look at thematic reviews this year, key risk areas, and members would be glad to hear that we're looking at procurement again this year, business managers remuneration, and a review of lunchtime duty payments to staff, and this has all been agreed with the head of service and director of education. Section 7, quality measures. Again, as members are aware, we send out quality control questionnaires to the schools after we've undertaken the audit. We had a return rate of 88%, and 100% of those 88% were at least satisfied with the overall usefulness of the audit. So on to section 8 and the conclusion, and point 8.4. It's again the opinion of the Chief Auditor that based on the work undertaken in the year, the financial management systems within the schools subject to audit testing continues to provide a generally good level of assurance based on the reported results, subject to some instances of non-compliance, which stated in the main body of the report. Appendix 1 shows the schools covered in the both DBS and multi-pay card thematic reviews. Appendix 2 shows the 6 schools that we individually or independently audited. Section 3 is the areas that we look at within those schools. Appendix 4 then is our quality control questionnaire. And that's the end of the report. Thanks, Chair. And any questions?
Thank you, Nick. That report's for information. So, David, do you know?
Thanks, Nick. Thanks for the report. Just quickly, really, just nothing major. Just, well, in 2.7, you talk about training for head teachers.
Yeah.
And you mentioned, obviously, the finance training. Does that include training about internal audit?
Thanks, Dave, for the question. I'll refer you to Kelly because Kelly's here and she organises, or her department organises the training for the head teachers. Kelly, okay to answer this one?
Yes. So when we undertake the finance training, there's quite a wide area that we cover. So we look at how schools should set their budgets, monitor their budgets. We also cover quite a bit on procurement, and we do mention what gets picked up through the audit reviews as well. And we do share that with all schools through our newsletter as well. So where there are common themes that Nick and the team pick up, we do make sure all schools are aware of that then as a sort of a learning sort of thing ready for when they get audited next. So does that answer your question?
Yeah, it does, and it's interesting because it mentions about finance, and obviously just picking up on the report about the high issues around procurement and multi-pay cards and everything else. But then I'm noted it's on the last sentence of that 2.7 that the training is not mandatory. I just
No,
wondered what you. Yeah, go on.
yeah, I mean, there are lists of mandatory training that head teachers and indeed governors have to undertake, but finance isn't on that list. We do keep a check of who has undertaken the training, and every 3 years we do sort of target people, you know, for refresher training if they haven't attended. But no, unfortunately, because it's not a mandatory class as a mandatory training session, we can't sort of force anyone to attend. We do offer bespoke training as well if a new head teacher is appointed, or if there's any school that just wants bespoke training, you know, we will speak to them, to their whole leadership team and governing body if they wish.
Okay, thanks for that. Thank you.
I'm minded of the time now, so if we can just keep the questions to what are critical questions. Julie?
Thank you, and thanks for the report, Nick. It's pleasing to note that you've continued with the thematic reviews, because I think it's an efficient and effective use of audit resources. You mentioned that risk assessments are performed by individual schools, so I assume it's some form of control risk self-assessment that you adopt, CRSA. When you go into individual schools and perform a face-to-face audit, do you make a comparison between what the schools answer in their assessment to your findings?
Yeah, thanks, Julie. Yeah, we send a questionnaire out, and depending on we'll ask for evidence in advance of what we need. Then there's always key risk areas that we will always test. So, if a questionnaire goes out and they're saying maybe something to do with sort of cash, and they say that they are banking within a certain period of time, then we'll always double check that anyway. So there are tests that we will perform regardless of the answer that we get. So yeah, I think that's maybe what you're asking.
Yes, thank you.
Okay.
Yeah, if there are no further questions, then if we can move on to the next agenda item. Before we move on to that, which is Ben, I would suggest that items 13, 14 and 15, we just note the standard items on the agenda. So if we can quickly move through 9, 10, 11 and 12, it may take us just beyond 4 o'clock. So are members happy just to hold fire for another 15, 20 minutes? Yeah. Okay, thank you. Ben.
Thank you, Chair. And in light of your comments, I will be as brief as I can. First of all, I'd like to thank yourself and the committee for last year agreeing to reschedule mine to come at my theoretically quietest time. It enabled me to actually spend some time thinking about it rather than doing it at the same time as I'm doing the statement of accounts and then the budget. The report itself is in similar format to previous years, and confession, I both like and loathe it. It requires a degree of manual manipulation, which is not the best use of my time. But if the report wasn't there and didn't get me to sort of write down and think about things, it wouldn't provide a useful prompt for some of the things I'm about to say. It is an interesting mix of the overarching strategic, and there are some specific items I refer in the report, which I've kind of touched when we were talking about on the statement of accounts. It's the lack of money, financial resilience, etc., which I can pick up on if there are specific questions. The other part of it is, by it being done in August when it is quieter for me, it means it's the end of July position. And when you look at the detail, if I'm honest, there are some areas that have significantly improved, which I shall draw your attention to, but also it looks a bit scrappy and a bit warts and all in places. I am looking forward to the replacement in-phase system. The stuff on performance management looks better in in-phase. I know, Chair, in your discussions with the Chief Exec, you've said you want at least one more set of assurance suites on these. But if we can move to something a bit more integrated and less sort of manually manipulated, that would be better. But I still think, having done the exercise with what we've got, it has prompted some matters in my mind to draw your attention to specifically, notwithstanding the general comment where when I look at it and think, well, I have updated some of it, but some of it in terms of the detail does look a little long in the tooth, and I will still need to improve further when it comes to updating in the new in-phase system. as I said, the priority items for me are set out in 2.5, which remains concerns about real terms cuts to public services. The fact that whilst I'm a very small directorate, when you strip out CTRS, I have a long arm and reach, because ultimately everything comes down to money and ends up in this statement of accounts, which is why you had the earlier item in front of me. I am sure it'll be no different in terms of when every other director comes through in short term, that there is a growing lack of coherence between national pronouncements at UK and Welsh government level about all sorts of things that would be lovely to do, and where on earth is the money coming from for any of them to be done, and a complete lack of capacity and resilience across all directorates. I'm sure you'll get the same message across all of us. You still see it, even though we've been celebrating, we're 3 months faster with the accounts, but we're still not meeting any of the statutory theoretical deadlines. It does just show how silly some of the expectations are and the disconnect across the piece. Part of my assurance regime is to be satisfied, as I've already touched upon earlier, which is I see no ships in current year, given we are well provisioned and budgeted for across the piece, but undoubtedly going forward it's going to remain incredibly challenging. I did just want to draw attention to a couple of the risks on a page. It was beyond my ability to only highlight the large ones, so you've got them all, including warts and all, but there are a couple I would just like to draw attention to where I think we have moved things on a little bit. One of my long-standing ones was to make sure I split out the longer-term, medium-term financial delivery from the short-term. So risk ID 159 in the appendix remains one of those stubborn ones where I refuse, with agreement from performance management and CMT, that the inherent risk and the residual risk remains exactly the same. It is the single biggest risk, in my humble opinion, to any authority in the land around the longer term ability to deliver with constrained resources. So I think that one is going to stubbornly remain the case. The split then in terms of 160 to agreement of the annual budget and plan, I have a lower residual than inherent risk, only slightly, because I don't think things are going to get that much easier, which will be evidenced in due course with the budget monitoring to come, but at least it complies with the expectation that having done some action, it does result in a risk lower than the inherent risk. I remain concerned in terms of number 161 that if departments are late or fail to give me full information in time, that there is always a risk that I do not have all of the financial implications in proposals, and I remain especially sniffy with my colleagues. No apologies, and in terms of having the opportune time to consider all matters in front of me when ultimately Cabinet and Council make decisions. Some of them are forced upon us by very, very tight timeframes set by our political masters in UK and Welsh Government, but some of them we do not always help ourselves with. 162, I referenced the annual statement of accounts. The risks are still there. They're here, but they're late. I've already made that point clear. Finance staff posts remain a concern. I've already touched upon it in terms of the ability to cover posts and replace posts when people go. I'm concerned on 167 in terms of the lateness of decision reports. I am looking to improve the risk rating further by upping the ante and saying if I am not satisfied, along with the other statutory officers, the chief exec and the monitoring officer, I might start refusing to allow reports to go forward until I am fully satisfied. I will always attempt to allow reports to go through where they are urgent, but to make sure that reports are fully rounded and fully informed, then I may need to be a bit firmer on some of those proposals. And I think there was one further one which comes annoyingly later on because it's new, which is the added risk 394. This is the one that the leader, the chief exec, and I agreed that I would split out. We had one which was both budget and MTFP in the same vein, and I think it was right and long overdue. And that's why you've got no historical data for this one, because it only appeared in July, around living within means annually, which I have got a quite significantly lower residual risk than inherent risk. But invariably, when first quarter comes in a couple of weeks to Cabinet, and the pressures I've already referenced previously, don't be surprised if that one starts creeping back up again. I think that is just reflective of the reality we face, that the sorts of services we provide are significantly under the cosh in social care, schools, homelessness, all of the sorts of things every authority is under. But I think there are some improvements there, notwithstanding some of the detail when you lay it out does look a bit long in the tooth, and I've still got more to do on that. But I think that is partly reflective of I am the smallest directorate. When you strip out CTRS, Council Tax Reduction Scheme payments, which are 70% of my budget, So I have the smallest directorate, probably the smallest administrative function, the smallest and leanest management function. And that's partly as a result of probably when I was created, split off from resources, and probably is something that still needs to be looked at. But I am a realist. As I said, when Johnny was here, there ain't going to be any more money for back office functions when there are enormous pressures on our biggest spending services. So it was useful to do the exercise. A little couple of winces from me when I saw how long in the tooth some of my comments are, and I need to redouble my efforts on improving some of them. But I think at some of the big strategic level items, there has been significant progress in terms of taking them forward. And it is much about the overall narrative, because there won't be an authority in the land that isn't worried gravely about living within its means and managing its finances with very, very limited resources at its disposal. So I think that's all I wanted to say on the report, Chair. I'm happy to take questions, but I do accept, that there are, when you look at the detail, there are lots of things that need to be tidied up, and some of that will be post in-phase implementation for the new risk system. Thank you.
Thank you, Ben. I found this very helpful report and quite transparent in where the risks are. So any questions around the table on this one? Julie?
Thank you, Chair. Ben, when you presented the draft statements of accounts, you mentioned that IFRS 16 is operational from the 1st of April this year. You recognise in this report that capability and capacity within your team is an issue. So is IFRS going to impact further on that?
We hope to be okay, and part of the discussion we've had with our auditors is we've looked to implement some of it sooner than we were obliged to prepare for it. So I'm not so concerned on that one. If you'd asked me that question a year ago, I'd have been gravely concerned, because I just had from the previous year an audit qualification on capital, the significant absence of most of my capital team, so I had nothing to throw at it. I have got back people who are on long-term absence for valid reasons, and we have added to the capital team. So at least I have some resources in there, a bit like what Johnny said earlier. I'd love to double it, treble it, and do things with lots more time and effort, but I'm less worried than I would have been. It is on our radar, and I do not see that as being a grave concern for me. It is just one of those routine challenges that professional standards move on, and we will take it in the round. I am really pleased that the capital team has tried to get ahead of itself as far as possible on all of the things that are there. You'll be well aware the complexities of capital accounting are really, really difficult and complicated further by IFRS 16. So I'm not overtly worried about it. I would have been a year ago.
Okay, thank you. And if I could just ask you a couple of questions on the risks. On the financial control MTFP delivery, you've got one control measure as let me just read it. I've got it here. Further development work to progress on transformation agenda over medium term through achieving better together, reshaping programme. Are you talking about savings to be generated from the transformation programme?
Yes, and I anticipate that when our financial resilience report comes, they will be making very similar points to the one I've made in there, that the magnitude of savings required, given the real terms reductions to come, will require significant transformational savings. And then the risk is, can you evidence that they are delivered at pace and with sufficient granularity, notwithstanding they might be big ticket items, to assure that they might be delivered, and yet you don't end up in a position where only a fraction of the programme plan savings are delivered, because then you start to open up very wide gaps. So it is very much in that vein, and I would anticipate our external auditors coming to the same conclusion in due course with financial resilience, probably across all 22 authorities in Wales. Let's be honest, there should be no surprises in that.
Okay, and on risk ID 161, which is the financial implications of any proposed actions, I know you touched on this in your narrative, but can you provide the committee with any assurance that the process for evaluating the financial implications of proposed actions are fit for purpose? So I'm thinking about commitments in advance of sound governance, basically, in terms of authorisation of expenditure.
So there are a couple of aspects to this. The one that gives you absolute assurance, and the one I am really pleased most definitely works in this authority, is people do not move without seeking my consent, and wherever possible early approval to things. There will always be a couple of items where sometimes things need to be done at pace and then might be retrospectively approved through cabinet, through grant process. But one thing that does work really, really well is I'm pretty certain everyone knows Mr. Grumpy will otherwise come and find them. That bit does work quite well. It's not that angle I'm worried about. It is when it's tied up with sometimes the reports come incredibly late. They may be time pressured, and it is still in ultimately the judgment view of the statutory officers that it is better to take the report than not. But it's more around some of those, how do you evaluate all the options for a scenario rather than people going off and doing things without getting permission. And that works at both the member cabinet level and officer level. They do come very quickly to my door. It's the angle around, well, do I trade off each of the 10 possible permutations of things that could be done? And in the round, it's more around that one that will probably is the bit that concerns me more. If you end up doing something quick, which is still done and is with my consent, or for it to go forward, I would like to see more done on evaluating the trade-offs and options. We see it most noticeably when there is a perennial debate in the political environment around what is right or best in terms of revenue versus capital and borrowing and trade-off decisions. And if you do more capital and there's no money turning up, you may be required to do more borrowing, which then means you may have to make downstream revenue consequences. I think those are very well discussed in political environments in council. They are also discussed without whipping, in scrutiny. They are a perennial theme in every meeting I am at. It's more that is it seen in the round of being a full evaluation and business case of every option? It's different. Some of the school stuff, for example, to go through the 5-case business model, they take forever to get through that. I mean, that's equally just as difficult and long in the tooth to be done, but not all of our capital decisions are taken through the exact same process. It was in that context. But the absolute assurance committee can get is people know they will feel the wrath of my tongue if they were to forget to check with me before they attempted to do something that required more than 3 pence to be spent. That is something that does work really well, to be fair to all of my officer and member colleagues.
Thank you.
Thank you so much. I don't think there are any other questions on this paper. Can I thank you for that, Ben? And it was quite good to hear you say it did provide some thought processes in doing that exercise. If we can move now quickly on to the next item, next 2 items. And Lee, thank you for your patience. You've sat here patiently all afternoon. I'm sure you found it riveting in doing so. So if you can take us through it, if I can ask you just to pick up the key points that you wish the committee to be aware of, then go through the report in detail.
Of course, thank you, Chair, and afternoon, everyone. Yes, I'll take you through the key points for the 2 Audit Wales reports and kind of where we are in terms of embedding those pieces of work. If I take the first one quickly, Together We Can report that was published in January 2023. That was really focused on how local authorities are helping people to be less reliant on often stretched public services and to help communities to become more resilient and self-reliant. So what we did very quickly was we took the report recommendations. There were 2 recommendations in there, one which says basically do a self-evaluation and the other which says implement what we find. So we've completed that self-evaluation process. We've developed a Together We Can action plan, which has identified a range of activities that we want to implement, which are included in Appendix B in the tracker on page 356 of your papers. But fundamentally, the actions really focus on things like improving understanding, making clear governance under our corporate priority of tackling poverty in neighbouring communities, improving our engagement with communities, which is really key part to this. We need to make sure we've got the right connections using our resources and things like our local area coordinators who've got a good footprint in the communities and good relationships with local people, and embedding principles of co-production and so on to make our approach to community resilience and self-reliance much more integrated and much more joined up. So again, the actions that are in there, there's lots of different things we're doing. We've done some of it already, such as working on our definitions of what is a community, what is resilience, what is self-reliance, sharing that now with communities and going through that sort of engagement process as we speak. We've embedded the work to implement all of these changes into our Enabling Communities Transformation Programme, which is part of the Council's corporate transformation agenda. And we have a number of different activities like our Resilient Communities project, which is taking forward specific activities there into the community, such as building those relationships, mapping our connections with community activists and community groups and so on and so on. So the report really just sums up where we are at the minute. It's kind of taken all of those things we found during the evaluation, identified a governance and a way of delivering them and starting that process. Many of these changes will take quite a while to fully implement across all of the communities, and we're still building those connections and relationships. But fundamentally, this is about that change journey, and everything is sort of in place now for us to continue delivering those key activities. Again, I could go into all of the detail, but in conscious time, I'm happy to take any questions on that one to start with, Jeff.
Yeah, that's lovely. Thank you. I found this report very encouraging, if I'm honest, because there are some things that I've actually observed myself, particularly the collaboration at the Waterfront Museum. There was a lot of people there on the day that I visited. So it was good to see some of those things coming forth. One question I'd have before I open up is, obviously you talk about a programme brief to enable the outcomes to come true. Will that enable the council to gain assurance that the outcomes you are aiming to achieve are actually being achieved?
Yes, absolutely. So what we're building this around is a performance framework that connects the poverty and the community sides of the corporate priorities, so that we can demonstrate then when we implement a change or deliver one of these projects, the measurable outcomes that is going to achieve. We want to do that at a community level as opposed to a Swansea-wide level, because that's going to give us more intelligence. So we're working at the minute on what does that look like, what does that framework give us, and how we can then measure it at that very local level. But absolutely, that is our intent, and the way we're designing it is going to be to achieve that.
Excellent, thank you. Right, open up to questions, David.
Thanks very much for the report. As per the chair, really, I enjoyed reading through and everything. I'll just be brief, really. Just on point 3.3 on page 343, the third bullet point there, you mentioned about the transformation lead officer post, and I just wondered if that has been appointed, if that person is currently in post, and the objectives of that post, I presume, reflect the plan.
Absolutely does. So yeah, so the engagement transformation lead officer has been in post for a while now. They've started doing more work around what community engagement actually looks like. They're part of the social services department, and they are establishing a community engagement working group that comes underneath the transformation program. So as they start to, first of all, identify what already is out there, and then where we can improve or fill the gaps, etc., we'll be able to kind of bridge those gaps and then take that level of engagement to the next step. So fundamentally, that transformation role is going to help us improve from where we are now for better engagement with the communities.
I like the point you made about the link with the local area coordinators. I thought it was a really good link. Yeah.
Yeah, if I just mention that quickly, because yeah, one of the things that the local area coordination team is really good at is working with individuals and making those connections within communities. But potentially there is more that can be done to bridge those gaps and to enable some of the sort of community development work, building those connections across communities. There's plenty of potential for us, and we've been doing local area coordination for nearly 10 years now. So it's a great opportunity for us to think about how we can do even more in that space. So yeah, just wanted to add that.
Thank you. Thank you.
Thank you. Any other questions for? No. Okay, then if we can go on to agenda item 11, please.
Yes, and that'll be hopefully equally as brief and painless. The second reports are around I think it was the second or third of the Audit Wales reports that came under this tackling poverty exercise they did. So a missed opportunity is all about how local areas are working with or to promote, grow and kind of make the most of social enterprises in our area. Just to remind, social enterprises being businesses that trade for social or environmental purposes. So again, very similar in veins in terms of how the Audit Wales report was was established and what we did with it. The recommendations were to complete a self-evaluation, which we did. And again, with both the evaluations, they were sort of co-produced, involving multiple departments and teams across the council. We developed a similar action plan, but the difference, I think, in this to the other one is that we are tied in a lot more with what's going on at a regional level. So there is a regional working group going on under the West Glamorgan Regional Partnership Board, I believe. And they've been taking the lead on developing a framework and the sort of broader definitions and standards and things like that. So we're very much engaged in part of that work. But the next step really is for us to take some of those things that are agreed at a regional level and implement it locally. So we're kind of working on that at the minute. There is a what they call a Section 16 type organisation group. So when we're working with social enterprises, micro enterprises, etc. And at the moment, the focus is very much on health and social care type of organisations. So we want to kind of look a bit further than that and expand what we're doing in that space locally. So the current position, and again, it's in the papers, I think it's page 368, looking at things, we've already looked at things like our procurement, our commissioning, our contractual arrangements. You know, there are changes to our market stability reports. We're still reporting through the Director of Social Services annual report on the work we're doing under Section 16 of the Act to promote social enterprises. I think the next step really for us is to continue that local focus, to be much more engaged and involved with our third sector colleagues and others, and to perhaps be more of a driving force in some places where we see value and potential for us to help steer and enable and empower local communities to drive forward social enterprises. So in summary, that's kind of as far as we got really, because I think the work that has been co-produced at a regional level is the foundation for it. The next step is more around local implementation. So again, that's it from me, Chair, but happy to answer any questions.
Okay, thank you. Again, I found this helpful report. I mean, I note on Appendix A actions arising from it. Will there be a development of a work plan and a...
Yeah, sorry. Yeah, we do have an action plan in progress at the minute. I'm waiting for some updates to some of the work that's going on a regional level, and I'm also looking to appoint an internal an officer within my team to take forward some of those actions. So it's kind of just a little bit out of sync in terms of compared to the other report. But yes, we absolutely have an action plan that is going to drive some of those works forward. Things like raising awareness, building relationships with existing social enterprises, the forums and the networks we need to tap into, and all of those sort of things.
Just one minor point. I think on page 359, paragraph 4.2, you got based on evaluation completed, the following actions to be taken forward. I think that's Appendix A. Yeah, just for it's a minor thing, but. Are there any further questions from anyone in the room on screen? No? Okay then, thank you, Lee, and thank you for your patience.
Sorry, Chair. Sorry, my
Sorry.
hand went. I was a bit slow getting there. Just
Sorry.
a quick. I just want to thank Lee for both these reports. I think it. I like the fact that we, as a council, have responded so well to all the recommendations that Audit Wales have put, and I think we're, by the sounds of it, the action plan is going very much in the right direction. Thank you.
Absolutely agree, Councillor Walton. It's quite impressive what's been done. David?
Yeah, thanks, Chair. Just a quick, but I think it'd be good to maybe in the next 12 months to have on these two initiatives really, to have a training awareness session.
Yeah.
Just on progress. Thank you.
Yeah, we can put that in. Yeah. Okay. And the final report for us to quickly run through is the corporate risk. Obviously, Richard is not around at the moment, so we've got Lee popping in to take us through this report. Thank you, Lee.
Thank you, Chair. So the quarter one risks, just to summarise, there were 106 risks, 16 were new during the first quarter of the year. Compliance in terms of updating risks slipped back slightly. So in quarter four, in the quarter, we'd seen that compliance had slipped to 8 not being updated in quarter one compared to 2 in quarter four. Just to reassure members, the 2 subsequent months to quarter one, so July and August, there have been no risks which haven't been updated. So that performance is now where we would want it to be. So, and that'll obviously be reflected when you get the Q2 report. But just thought I'd drop that in now so that you can be slightly reassured about the performance is improving. And also, as part of the reports, you've got the risks on a page, which highlight the key risks that the council is facing in terms of corporate risks. I'm happy to take any questions, but that's a brief overview.
Questions on this? Seeing any hands up? Julie?
Thank you, Chair. Could I take you to risk ID 336, please, Lee? Mandatory training, you say, is changed down. It's been downgraded from amber to green, but Nick has presented a report to the committee previously on absence management and mandatory training. Only 348 out of 1,481 managers, or 22%, had completed the Oracle Fusion training. So I'm wondering what challenges there are from your team when risks are downgraded.
There aren't out-and-out challenges from our team. What we tend to rely on then is the officers providing that update. But I think you've raised a good point on that one. So I'll speak to the officer involved who controls that risk, and just to see why that's been downgraded. But we don't normally challenge on a monthly basis. I think that's done within the directorate structure. So the directors monitor their risks through their P&FM, and then they deal with their risk owners as to why risks would have gone up or down. But I'll check specifically on that point, because I think it's a good one, because it does conflict with information you've had, and I'll write back to Jeremy and the chair just to clarify that one.
Thank you.
I think it's a valid point, because there clearly are issues with the compliance with mandatory training, and the actual risk doesn't seem to reflect the current situation, albeit it may be a blip at the moment if there's a system failure. Okay, if there are no more questions on that one then. So the last three items on the agenda are the Audit Wales recommendation tracker, which is a regular item on the agenda. So I'm not aware of any problems in that report unless anyone wishes to raise them. Agenda item 14 is again the action tracker, which is progressing, and thank you, Jeremy, for keeping that up to date and included in the papers. And the final one is the Governance and Audit Committee work plan, which we monitor our performance against the terms of reference that are set us. Just one more matter, and that's to apologise for running over slightly this afternoon, but my 20-minute guess was just about there. So can I thank all members for accommodating that extra 20-minute time slot so we could complete the agenda without deferring anything. And on that note, I would like to thank everyone for their attendance and participation this afternoon, and look forward to meeting you at the next meeting, which is in October. Thank you so much.
Thank you.
Thank you.
Thank you.